Guys, welcome in. Today we have, what's your last name?
Genega. So it's Greg Genega.
Okay, so we have Greg Genega here. He's from Ohio, and we found you. You're from a crypto club, correct?
Correct. Yeah, I founded the Cleveland Blockchain and Crypto Group. Founded that about coming up on 2 years ago. We have over 300 members, and we're just a bunch of enthusiasts who meet about once a month just to talk about what's going on in the ecosystem and crypto. Crypto.
So
blockchain.
the reason we went down to Edgewater Beach,
Yeah.
and we were asking people about cryptocurrency because it's something we've talked about over the years, and I could not find anybody that invested in crypto, young, old, and I was like, what is going on here? Because we hear crypto. So that's when I said to Tim, I was like, we got to find somebody that invests in this.
Sure.
That still invests in it. There was a lot of people that invested in it through 2020, and then they just went away as the prices come down from 64,000 or whatever it was.
Yeah, it seems to follow these like hype cycles. Yeah.
Yeah, that's what we've found. So that's why we brought you in.
Sure. Yeah. Let's chat about it.
So I saw your interview with the PBS, Hudson, and you talked about you've read Peter Lynch and Ben Graham.
Oh, yeah.
So you've read Intelligent Investor?
I have, yes.
So, I guess, talk to me about what you loved about the Intelligent Investor, like what were your best favorite parts, et cetera?
Sure. So it's been a bit since I read it, but just about the fundamental analysis, right? So that's more on kind of like the investing in stocks, real estate, valuations, earnings, yield, et cetera. So just kind of all the natural things that book goes into in terms of properties of evaluating something and its worth, and investing for the long term, investing in good assets, et cetera.
Yeah. So what so what really appealed to you about that? Did you walk away saying this makes sense? Did you walk away saying, I don't really like this?
No, I thought it made a ton of sense. So the background there is probably about 10 years ago or so. Got a good paying job and wanted to put a bunch of my money away in my Roth IRA, 401k and such. And then I wanted to figure out, okay, is there anything I can do besides just index funds or anything, or mutual funds and things like that? And, how do stock pickers do it and such? So I just came across that book as one that was highly recommended, and really enjoyed the content into it. And I've used that as kind of a guiding light for at least equity and investments.
If you in your own terms could say, hey, this is what investing is to me, and this is what speculation is to me. Like, what would you say in those ones?
Sure. So I would say speculation. Well, I would say speculation has a lot in common with like the greater fool theory, right? Where you might speculate on an asset just thinking that it's just going to go up, and therefore, if someone will buy it from you at a higher price in some time range that's acceptable to you, that maybe that wasn't such a bad investment, but that's not real sound investing. Where you'd want to look at normally like the properties of the investment, take the whole picture into account. We talked about P to E, but also, the market capitalization and kind of the ratios between the valuation of those assets versus similar things, right?
Right. So in speculation, you'd say greater fool theory. For those who don't know, greater fool theory, the way it's come up with is saying, I'm going to find a greater fool to pay me a higher price than what I paid. But for investment, what would be in your terms? Because PE doesn't really matter if you have high growth rates. If you have a high, right? Exactly. So that's why, when I hear people talk about like the Ben Graham method, I think a lot of value investors do Ben Graham method, but most do not now. And the new method is more along the lines of Philip Fisher, of finding companies that can compound.
Right.
So in terms of that, like, how would you define to yourself, to the layman person watching who's listening to you, Greg, saying, how does Greg view an investment? Like, what would you say an investment really is?
Yeah, so I think you hit on a couple points there. So you're right, it's both the value and the growth prospects of it, right? So even if a stock right now is, trades at a high multiple, it seems to be overpriced, but if that company is something that can grow so much, where in 10, 20 years, however, it just has that much more of a market share, that it will catch up to that eventually, right? And so if those equities, those companies are growing at a faster rate than a very typical company, right? And a lot of these days, it seems to be a lot of technology stocks, for example. Those would wind up. And you could see very recently, right? Like kind of the year-to-date performance. Most of the gains, the S&P 500, have only been a handful of names. Big tech names, right? However, the market it's betting on those companies being extremely significant over the next decade or longer, especially with the advent of generative AI becoming really big now, that those companies will probably have a lot of overlap with that technology. So, but if you look at the valuations of those, some of those, a lot of people would say look very overvalued, with kind of standard valuation methodologies.
So when you were picking individual stocks, how did you value a stock?
Yeah.
Like a growth stock, like a stock you're like, hey, there's a lot of growth. Like, how did you determine your value?
Sure. So probably the story more than anything, right? Just to see what's compelling in terms of how fast they could grow the revenues, how fast they could grow their user base, how much they could potentially increase their margins. A lot of things like that. Like, what are things that I use every day, right? What are things that I could see myself using, could see my family using? Those types of things that have a lot of staying power, and those things that technology will advance over time as well.
So as a channel, we like to sit there and say, every investment's a present value of all future cash flow. When you hear that, do you say that makes sense, or no, that's probably wrong?
I would say that that's definitely, I would say free cash flow is definitely a huge indicator of course, future potential profitability. When you think about how does a stock, for example, return money to its investors, you look at dividends, you look at share buybacks, but you just look at the overall valuation of those assets going up over time. Again, revenues is a big one, right?
Well, it doesn't have to be a stock.
Right.
Every investment is the present value of all future cash flow.
Real estate or whatever.
All right, so go into crypto. So when you say you're a certified crypto expert, is that what it is?
Yeah, certified Bitcoin expert, cryptocurrency, decentralized finance, Ethereum.
Can I ask what makes a crypto expert? I don't know.
It's okay. It was a certification exam that I took by a company called the Blockchain Council.
Okay.
Yeah. So it's kind of like if you certify for anything to prove that you're educated on a subject, right?
Yeah. I didn't know that.
So when it comes to crypto, clearly you're not saying it's like a stock, right?
No, I would say it's valuated mostly differently, and it depends whether you're talking about Bitcoin or the broader cryptocurrency ecosystem. As I do believe that there's, besides the fact that they both use blockchains, that they don't have a whole ton of overlap, because there is the ability to basically distribute fees through a lot of these crypto assets, similar to how companies do perform, right? Think of these as being some of them being internet native companies that can distribute fees to their token holders, or even do things like buybacks as well.
So there's several thousand, 22,000 different currencies, I believe.
That's actually a real good guess. Yeah, probably a little over 20,000 total. But there's probably more. There's tons created new every day. There's these very open systems where anybody can go in and create them.
So 2 questions off of that.
Yeah.
What differs one from the other? And the fact that you can create as many as you want every day.
Right.
How do you decide what to buy? How does anybody value anything?
Sure.
Because I look at it and say there's one main cryptocurrency, and that's Bitcoin.
Yeah.
Everything else is just created out of thin air.
Well, so is
Bitcoin, but
right?
it's the one that people flock to the most. If I had to choose one and say this is the, I don't know, quote unquote, most viable, it would be Bitcoin right now.
I would say the same. Yeah, I think that the Lindy effect that it has, that it's been in the ecosystem and how pure it is and decentralized and such, I would tend to agree with that. That's definitely the biggest competitor, something like gold, and I really like that alternative to gold.
What separates Bitcoin from
Ethereum?
One that we've never heard of.
Great example, right? So Ethereum is this. It's a smart contract platform, right? So Ethereum basically took the advent of Bitcoin and then added a programming language on top of it. So think of it, instead of it just being money or a store of value, well, now it's a almost programmable store of value, and where you can create these ecosystems. So this concept of decentralized finance, right? So what's And if you look at the activity in the Ethereum blockchain, right, there's a lot that goes into it that actually makes it scarcer over time. Bitcoin is a disinflationary asset based on its hard-coded monetary policy, and Ethereum is currently a deflationary asset, because the more that people use the Ethereum ecosystem and the more that they take up the block space and use the transactions, it actually removes Ether, the asset, greater over time, which could give it a value accrual mechanism if supply and demand remain equal, if you think about that. For Ethereum specifically. And a lot of its competitors, right? There's a lot of smart contract platforms that are very similar to Ethereum. They might use some different programming languages. They definitely had different token generation events, things like that. But
so how is Bitcoin inflationary? Did I even hear that wrong?
It's disinflationary.
Oh, disinflationary.
Yeah, because the amount of Bitcoin that enters the ecosystem gets cut in half approximately every 4 years. So every 10 minutes.
Because of the cost to manufacture it, mine it?
It's hard coded. It's not the cost that it is to mine it. It's hard coded in the Bitcoin source code. So currently, approximately every 10 minutes, there's 6.25 Bitcoin that basically gets distributed to the miners. Well, it technically goes to one miner, and they're pooled together. But every 10 minutes, 6.25 Bitcoin are created. Sometime in the spring of next year, that's going to get cut in half to 3.125 Bitcoin every 10 minutes. 4 years later, again, approximately cut in half again, until it'll all be distributed around the year 2140 or so.
So what happens when somebody loses? Like, we hear stories all the time about somebody lost their Bitcoin.
Yeah.
What happens to that Bitcoin?
It's basically gone forever until someone finds that private key, which is this really huge string of numbers, which is kind of, think of it as your username and password, right, for that Bitcoin wallet. So when people are losing their Bitcoin, generally what they're doing is they're losing access to the private keys.
So when it comes to valuing Bitcoin, what do you think the value of Bitcoin is today?
Well, the current market cap of it is a little over $500 billion.
What do you think it is?
Yeah, so I like to compare Bitcoin to gold, right? So when you look at gold right now having an approximate $13 trillion market cap, and Bitcoin having a little over $500 billion, right? So there's that, call it 25-to-1 ratio, right? And looking at, okay, which is the better store of value, right? And in terms of its features, right? So we look at what made gold money over the years, over the last 5,000 years, the scarcity, the portability, the divisibility, the durability, et cetera. If you take all those features in gold and apply all those same features to Bitcoin, I would say for the very large part that Bitcoin does all those things better. I actually do. I believe that Bitcoin maybe does have the potential to have a larger market cap than gold someday, right? So that would be a 25x just to catch up there. Now, gold has some inherent uses in electronics and computers, right? So a good part of that valuation, I don't know if it's about half or something else, but.
So you said something earlier about stocks that you really like looking at the story, and that's how you drive your value. But I'm not getting the disconnect of how the story translates to value, because I'm hearing that same thing with Bitcoin. It's like, okay, well, gold has this value. But the thing is that's so big on crypto is it's all about decentralization.
Big time.
So what happens when it's no longer decentralized? Because we're headed to that path now. In fact, you see a lot of crypto enthusiasts asking for regulation.
Absolutely. I think the industry absolutely needs more regulation so that it could grow for sure. So there's more clarity of the grounds to play in.
What percentage of net worth is in crypto?
What percentage of net worth?
Your net worth.
My net worth?
Yeah.
Oh, that's a kind of a personal question.
I'm not asking for dollar amounts.
I would say somewhere between 20 and 30%.
Now that people are isn't the point of cryptocurrency to be decentralized?
Absolutely.
Now,
and
but
blockchain
we're asking
technology.
for centralization.
So I don't think that. So I think there's a difference between when you compare decentralization and centralization to something that's regulated or unregulated, right? Decentralization, in my eye, means that there's no third party, there's no counterparty risk with owning that asset, right? So in the example of Bitcoin, you have your private key. There's no third party that can come in like any kind of government or bank or anything that has the security to yoink that out of your account.
Now, don't you think, we all know government is very intrusive. Once you give them an inch, like any type of regulation, they're going to take a mile.
Wait, better question. When have you ever seen the government back away.
I
don't care what your politics are. Just tell me,
Yeah.
when have you ever, if you can give me one time in history that the government said, you know what, we overstepped, we're out of here.
Yeah, I don't know. I would say
I have a good answer for you.
Yeah.
It was.
I mean, I gotta just tell you right now, like never. Apart from the fall of the Soviet Union or some sort of like communist regime, we've never ever seen the U.S. government. You know what the first income tax was?
What was that?
You remember what year? You know what year it was? It was in 1913.
Okay.
What's your effective tax rate? Just do it in your head, like what you paid last year in taxes versus your gross, like percentage-wise, ballpark.
What was it? Some of the low 30%,
Okay.
right? Yeah.
The first tax rate.
Yeah.
Let me ask you a question. Do you make $11 million a year?
No.
Okay. The first tax rate was in 1913. The first income tax was 7% on every dollar above what would today be $11 million. Now, I pay almost half, and I don't make $11 million a year.
Right.
My whole point is, I always laugh when people are saying, no, this is great, it stays away from government, and then all of a sudden, government was like, no, wait a second, you got to pay taxes on that, then this. And I'm looking at it going,
and those rules apply today. You do have to pay taxes on
but it
those
didn't
gains.
for a while.
You're right. Until,
until
the regulation caught up, right? Yeah. Yep.
Until to the defense
IRS,
of
right?
crypto, they're like, okay, it became a real asset.
Exactly.
So let me ask you this. Who do you have your money with? When you invest your money, your 401k, your ETFs, is that with a regulated institute or a deregulated institute?
It's with a regulated institute.
Is it with
has to be.
Yeah, it has to be.
Yeah.
Do you have it with a well-known one? Do you
Absolutely.
Okay.
Yeah.
So if somebody asked you, would you rather put your money into this key thing right here or with something held by a government agency that's regulated that, you sit there and say it can't be, it's like, this is a passcode. If people can easily lose the passcode and they lose all their money, how is that safe?
I will say, my dad did. He had 12 Bitcoins that he bought years ago, and it's just gone.
Yeah, you're right. That is definitely a hurt. So that's if you do go the non-custodial route, right, where you are taking custody of your private key, then that absolutely adds onto that risk. Where if you don't do things with safety deposit boxes or however or memorize it, right, there's a million different ways you could do it. Then you're right. That is absolutely a risk, and I would say it's a user experience that needs to be overcome, really.
But who overcomes that if there's nobody overseeing everything?
Well, it's not going to be
regulation comes.
Sure.
But that's where I think centralization comes in.
most people do utilize centralized exchanges to store.
They're now being cracked down on.
Of course,
by the U.S. government.
Sure, for sure.
So
but a lot of the biggest institutional names in the world are also utilizing some of those exchanges as well for their custody
To me, that's just them going, listen, there's a lot of people doing this who might as well make money off of it. I mean, Jamie Dimon has been very vocal about, the crypto's dumb, but we're going to make money off the people who want to use it. Just like me, I don't believe in mutual funds, but if I was a major bank, I'd have a mutual fund. Because if somebody wants a mutual fund, great, I'm going to give it to you.
Yeah, there's no doubt that there is demand, and that Bitcoin and some of these other assets have captured the hearts and minds of investors, and they want exposure to it. And those institutions know that, of course, they're going to make fees for offering those.
Well, one of the questions that I asked when I was on the street asking people questions was, do you think that the cryptocurrency, I don't know what it is, can replace the US dollar? Because that's been a lot of a talk.
Yeah, I don't think so at all.
Oh, praise the Lord Jesus Christ, my Savior.
Okay.
I do like it as a
variance
comparison
of
to gold. Yeah, I do like Bitcoin as a comparison to gold. I really love that.
So do you look at it as a commodity?
I do, absolutely.
I do not have Bitcoin on my watch.
So it's a commodity.
I would say Bitcoin absolutely is a commodity. Yes, in my eyes. Yeah.
So what I've said a lot in the past is I don't think crypto in its current state succeeds. I think it's got to change completely, and I think it's got to be, in my personal opinion, looking at everything in the history of finance and money in the world, not just back 50 years, talking about hundreds of years. I think that when you look at these things, like El Salvador went and sat there and said, we're going to be the Bitcoin people. And that always made me chuckle because every crypto enthusiast was like, see? And I was like, El Salvador is like...
They're still dollarized, yeah.
It's a joke.
They barely have.
No offense to anybody from El Salvador.
There's not really an infrastructure
It was a Hail Mary pass. And I'm looking at going, now, if the U.S. government came out and said, we're going to take Bitcoin as our cryptocurrency, but then you have a problem. The problem is then it's going to get attached to the dollar in some fashion. And all of a sudden you lose that you lose that
Decentralization.
not only decentralization,
The allure of being away from the
but
government.
also the valuation, because you want crypto to be something separate from the US dollar.
Now it's valued as a dollar.
And we didn't see the US dollar go from pennies back in 2009 to 60,000 in 2021 or whenever it hit the peak, and down to 30 today. That's where I go, listen, I like decentralization. I'm a libertarian. I'm like the only libertarian in the world who's not a crypto enthusiast. Because I sit there and say, maybe I'm not the extreme libertarian. I just sit there and say, listen, government has its position. I just think government oversteps a lot. I've never seen government not overstep. And I just worry about that for crypto going. Somebody said it brilliantly to me once. You don't want the government as your competitor.
Right.
The government will just wipe you out as a competitor.
Right.
If the government's your competitor, it's very easy for them just going, that's outlawed.
Yeah, I would definitely say that. So I've been in this space for 7 years, right? So my first Bitcoin purchase was 7 years ago, and have been very active in the space ever since then. And I would definitely say at those first few years, that was my biggest fear, that it would get overregulated and to the point of being regulated out of existence. But if you actually follow a lot of the House and Congressional and Senate Banking Committee meetings and the dialogue that's going on, a lot of the bills are being proposed. There is a lot out there to make it so that it can thrive as an ecosystem, that innovation can happen there. There's actually a lot of sound regulation being proposed right now, so that I don't believe it'll be regulated out of existence. I do believe certain elements of it will be taxed for sure on the gains, but I do believe it's here to stay. I think in some ways it should. Bitcoin is tough to say, right? There's there's a presidential candidate that's running now who wants to actually remove the taxing from things like Bitcoin.
Why?
Yeah, what's the reason?
Who is it, Robert Kennedy?
It is, yeah. It is. Yep. Yeah.
But to me, I'm like, do you consider it an asset?
I do.
I did.
Do you consider it an investment?
I do.
You don't think it's speculation?
I think there's an element of speculation. I do think that Bitcoin grows one day where it is around like the value of gold, where it's actually not going to be nearly as volatile as it is right now. That uncertainty in it right now, I think, is a lot of where that volatility gets derived from.
Do you believe artwork is an investment or speculation?
I think it can be both. I guess I would say it's a little more speculation.
Would you consider crypto closer to artwork or closer to a stock?
I would consider Bitcoin being close to gold, and some of the crypto assets.
You did say that.
Right, some of the crypto assets being completely speculative. But some of the crypto assets actually being internet native applications that accrue value, that distribute fees for people that use them, that provide useful products, right? So decentralized finance is, I think, a really good ecosystem to investigate, because there's lending and borrowing in these systems that you normally would depend on centralized institutions that you can do in a decentralized way now. And there are fees that you can accrue to that, right? The concept of stablecoins that you could have on the Ethereum blockchain, other blockchains.
What is stablecoin?
Stablecoins, they're cryptocurrencies that are backed, supposed to be backed by the U.S. dollar, but are definitely supposed to be. Because not every stablecoin is, right? Because there's algorithmic stablecoins. Of course, there was one that blew up last year from that. But there's entities like
Litecoin.
That was Terra Luna.
Terra Luna, sorry. Litecoin's another crypto.
Right.
Yeah, it was Terra Luna. Thank you.
Yeah. So, but
it didn't do bad. It only lost like 99.9%.
Right. Yeah, something like that. Okay, yeah, it's still somehow kicking around. I don't know how. But when you think about, for example, Circle's USDC, which is kind of considered, the U.S. native stablecoin that has, the most backing. I think it has the second highest market cap of all stablecoins, and that is basically backed by either cash or cash-like assets, treasuries, things like that, so that you can go to Circle and say, hey, I'm going to send you 1,000 USDC on the Ethereum blockchain. I'm giving it to your address. Okay, wire me the $1,000 back, and they have that set up, right? So that's what a stable coin is. So now that you have this capability of having these digital dollars, these internet native dollars, now you can do things with those dollars. And the most common thing that's done is decentralized finance, where you could lend those out, for example, and make a return for people who want to borrow those. So that's a very common way to do it. Or you could use it.
The government's not going to let you do that.
I don't know. The stablecoin legislation is absolutely.
Have you heard of Prosper.com?
I don't think so.
A lot of people go lend money to other people.
Okay.
There are specific states you can't do it in.
Oh yeah.
So why would that change for this? If you want to, that's the thing I get stuck on is. Listen, I appreciate you saying like, not only am I gonna make it, look at the internet, for example. 23 years ago, how old are you?
I'm 40.
Okay, so I'm 42, same ballpark. You know how many internet companies went to zero? Did anybody doubt that the internet was not gonna be the biggest thing ever? Nobody doubted that. It was like, yes, this is changing the world. But how many .coms went to zero? Even the one that made it, Amazon, you know how much it fell from its peak to its bottom?
I know it's only 90%, so I know
96%.
Yeah, 96%.
I mean, it's an absurd number. And I'm looking at it going, do you believe it's possible to overpay for a good thing?
Do I believe that it's possible to overpay for a good thing? I would say yes, because a lot of the future is uncertain. Now, that's going to be a good thing. It's going to be a greater thing. It's going to be the best thing in 100 years. Then overpaying today, it was probably not going to be looked at as overpaying in the future.
But it's okay. Glad you said that. So when you talk about gold and Bitcoin being simple, what made you is it just because you said, hey, I think gold is like Bitcoin, so therefore, is it more likely to be something where gold falls in half and Bitcoin makes it, or you think they're going to be equal value? And what made you decide that number as opposed to something like that's the thing? Like when I look at value, for example, baseball card. Mm-hmm. Baseball cards are purely speculative.
Yep.
However, I understand how people can say a Honus Wagner baseball card will never be recreated. There's only X number made. I get that. But if all of a sudden the world economy goes to nothing, and we go back 300 years, then hypothetically, that Honus Wagner is literally going to be used as fire. So I look at it saying, I can understand the idea that people think it's an investment. And by the way, I have artwork. I have rare things. I buy rare books. Mm-hmm. I don't look at them as investment. And I'm looking at going, how is that different? When you say greater fool theory, yes, I know you said like, hey, gold could be gold, but why'd you pick gold? Just because it's the currency it's currently?
Because it has the 5,000 years of history to go with it mainly, right? And as generally seen as the fly to safety, as the store of value when things are uncertain, like what's going to happen with the dollar or the future, right? So that if we need to go back to a commodity money based system instead of a fiat money based system, right? So there's history. I don't think so either. I don't think so either. It's happened a lot over course of history, but
I shouldn't say it's not going to happen. I think it's highly unlikely,
right?
Because that would limit the amount of money printing we can do significantly. And
have you ever paid for something with crypto, like bought something with crypto?
Yes,
but they're generally also internet native assets. Yeah.
Do you know how many daily transactions there are of crypto going on today?
I don't have
Bitcoin. Sorry,
Bitcoin. So I don't have that number off the top of my head. I feel like I have to look at it, but I believe in every 10-minute block, there's, depending on how full it is, there could be something like around 1,000 transactions in it. I have to look into it.
So I looked at the data, and something like 500,000 transactions per day are reported on the Bitcoin ledger. Now, is that full Bitcoins or even partial Bitcoin transaction?
Oh, it's absolutely partial.
That's what I thought. I was going to say, I'm like, how is it possible that people are doing $500,000, $30,000 transactions?
Each Bitcoin is divisible into 100 million units.
Holy shit.
Has that always been the case?
Always. It's hard-coded in.
Okay. So, but then I look at the cost per transaction. Do you know what the cost per transaction is?
So it definitely varies based on the demand of the network, right?
Okay.
So
what is it currently?
So there's this whole thing called ordinals that blew up recently that really made the fees go up a lot. But I would say that when it's slow, it's a couple dollars, and when it's very congested, it's like $20. But that's the base Bitcoin network. You wouldn't do payments on the base Bitcoin network, right?
I read today based on $50 per transaction. Then I look at Ethereum and it's $1.30. And I'm like, okay, so that's a significant difference in transaction cost.
It's supply and demand. Usually it's the other way around. Usually Ethereum is actually more congested. But
not the cost-wise. I looked at the charts, and Ethereum's always under Bitcoin pretty much.
You're talking about the fees to send it. I'm assuming.
The transaction fees
to send it. Okay. I think that, again, there's this whole ordinals craze going on Bitcoin right now that's actually greatly increasing the demand of Bitcoin block space. But if you were to go back a few months, I'm not so sure that would be true. I'd say they'd probably be a little bit more similar, but it's supply and demand on the block space. And you can't just look at the core blockchain, the fees that those are accruing, because there's a lot of compression mechanisms, this concept of layer twos that could be done. So for example, Bitcoin has the Lightning Network, where basically those fees are practically nothing to send any amount of crypto. That is a centralizing vector for it, right? But that does give the capability of spending digital assets for practically no fees, these scaling solutions, right?
So I guess my question is, if it becomes more and more like the US dollar, and you have the choice of using a bank transaction that's regulated, that I have all these things, why would I choose any crypto? Unless I'm trying to do something illicit that we can't do anymore.
So I think the term cryptocurrency is really falling out of favor. I think people are realizing that they're not really trying to compete with the US dollar. I really don't believe that. I do believe Bitcoin is competing with gold, and I do believe.
But what's gold?
What's the competition of gold, though? Like, what's the point of the competition?
That's a good question.
What's the competition of gold?
What's the purpose of it?
It's a decentralized store of value.
No, what's the purpose of competing with gold? That's what he's asking.
Why not just go buy gold?
Because I think that Bitcoin does it better, right? And that it's internet native, and that you could transfer over the internet, and that the monetary supply of it is hard coded, whereas gold it's not.
How long has crypto been around? How many years?
Since January 2009, so 14 years.
So you're looking at that versus
thousands
5,000 and
That's
thousands.
the only thing that needs to be overcome.
I don't do any transactions with gold. I do
Right.
all my so that's what I'm sitting there saying. I'm looking at going, okay, I look at crypto, and unless I have a real reason to, I guess I haven't been told yet, here's the reason you use crypto over US dollars.
So the only one that would compete with it would be stablecoins, right?
But even then,
those are basically just digital dollars.
I can't go to the store and just
right.
You're right. Yeah, but even then, even if I could today, I'd still sit there and say, why would I want to put my money in something that's so volatile that it changes in value so much that look at it this way. I have properties in Mexico. All my money is paid to me, and all my bills are paid in US dollars. Why? Because I don't want that volatility of the Mexican peso.
Right.
And the Mexican peso hasn't fluctuated like Bitcoin has.
Right.
So I look at that saying, I'm looking for the reason why I'm going to choose to do a transaction in crypto versus the US dollar, when the US dollar is backed by the entire US government.
Yeah, and the rule of law of the US government. I agree. Yeah. I don't think that a lot of crypto assets, their purpose is to be a medium of exchange like the dollar is. I don't believe that way.
What's the purpose?
So the purpose is, again, you have the Bitcoin as the gold but comparative, but you mentioned there's over 20,000 other ones, right? So speculation, probably 99% of some of that stuff, right? This whole meme coin craze, right? Like that is absolutely purely speculation. That is purely greater fool theory. However, there are crypto assets that are actually basically internet native applications that can inherently interact with value in a way that's quicker and cheaper. So if you want to build transactions within an application and you want to bypass, whether it's the banking system, the credit card system, whatever, you want faster settlement.
Until the government gets involved. Because why would the government allow you to bypass all of that? Why would the government in the United States or any major government say it's okay to bypass all of our stuff?
If so, there's always going to be definitely AML, right? So anti-money laundering is absolutely going to be a concern for the U.S. government and should be, absolutely.
By the way, they don't give a fuck about money laundering, but they do, because they want to make sure that they're getting their tax money and their cut, and they want to know where every transaction is going.
And I think even further than the U.S. government, when it comes to the banks, they're not going to let a work around it. They're going to the bank lobbyists. They're going to shut it down. They're going to, unless they're involved.
What does it cost me?
I don't know.
$20,000 wire. It cost me $20.
Unless they're involved.
That's pretty low transaction cost.
So I don't know if that's totally true, because there are a lot of banks that absolutely are building in this space.
I agree.
Right.
I agree.
That's part of it.
Yeah, but they're going to still. You're telling me the bank's going to be like, listen, we're going to build a system out, or we're not going to watch anything that goes to the system.
No, of course they are. Yeah. No,
so I'm looking at going, as it gets more and more accepted, you're going to have more and more regulation. It's going to lose its instant factor. I can get behind
regulation that leads to centralization.
But that's the thing. And I look at it going, I can get behind the whole instant factor. I love Venmo because I can just go, boop, there's your money. And I look at that saying, great, there's a lot of value to that. I'd love to be able to Venmo a vendor, but I look at it also saying, well, if somebody can disappear on me and I have no
recourse
recourse on them, You know how many things I pay for on credit cards just because I want recourse? I absolutely want recourse. There's sometimes when people say to me, I'm going to charge you 2% more to use a credit card. Fine, because I want to be able to have recourse on them. If all of a sudden I use my Amex and it's typically a 4% fee and they're like, listen, we're going to charge you 2%, but it's a $20,000 transaction, I want that recourse, especially when I'm sending money to China or something. I want to be able to have that recourse. And I look at it going, how does crypto change that?
Yeah, I would actually say, so that feature is definitely one that gets highlighted a lot with cryptocurrencies, the ability to kind of send it instantly. However, I think, and especially in Bitcoin's case, that's not the real value proposition of it, in my opinion. That immutable monetary supply, that fact that it is decentralized, that you don't need a central intermediary to make it work. I think that is what makes it beautiful. Because if you think about the issuance rate of the US dollar, over the past however long, 50 years, the issuance rate on average is something like over 9%. I'm not talking inflation, which as a whole is measured a whole different way. But when you have dollars that have a 9% per year on average issuance rate, and you have something like gold, which has issuance rate being dug out of the earth, which is very low. I think it's 2% or less. You have Bitcoin, which is just under 2%. That's going to go down to 1% to 0.5%. So when you look at, and you figure all money is going to settle into assets, right? And it's going to be up to the market to figure out what the current fair value of those assets are. So yes, a large portion is going to go to equities, a large portion is going to go to real estate, but a tiny portion of it right now does go into digital assets, right? There are people with money that are making those bets that is an undervalued and high potential, definitely risky right now, asset class.
I'm going to say something that is actually a compliment, but probably won't come across as a compliment. You've probably given the best arguments for it, but you still have not touched on intrinsic value.
Yeah.
And intrinsic value is something that's discussed in security analysis, intelligent investor,
sure.
Because I look at crypto as the greater fool theory. When you said it early on, I just kind of smiled in my head going, this is the great, I don't even care if it's Bitcoin. Even if I look at it going, you can't give me all the things you said right there. Don't tell me that Bitcoin is worth $1 or $10 million each.
Right.
Nothing in between. I've heard nothing to say why, at least with like an asset like real estate, I can sit there and say, or stocks or some sort of cash flowing item. I can say, well, how much am I willing to pay for that cash flow? Even a negative cash flowing item, if it can become cash flow positive at some point, the present value of all those future cash flows are worth something.
Right.
With crypto, I have no idea whether Bitcoin is worth $1 or $10 million each. And everything you've said so far has said, here's why crypto could be around for a long time, but it has not told me why crypto will go up to gold's value.
Right. Yeah, you're right. It has to deal, there is definitely a story involved here. There is time.
It's speculative.
There's to a degree for sure. Yes. I absolutely think that there's volatility and risks in the valuation of the asset. But when you,
but there's no valuation for the asset.
Well, if you look at first, Bitcoin, of course, is the oldest, digital asset, right? Crypto asset.
It'd be in high school right now.
Yeah, exactly.
If it was a child, it would be in high school.
Right. So I think that Lindy effect, this is the first internet native asset that's secure, that's decentralized. You can't shut it down without shutting down the whole internet, right? So it is a honey badger, it is a cockroach, it is going to be around forever, right? Now, so if you think about it in that way, then think about. I actually think a lot of the use cases for this, it's not going to be generally. Primarily in the United States, it's going to be in emerging markets. It's going to be in countries where their government and their banking and financial institutions are not reliable, right? There are countries out there like Lebanon, for example, and Turkey, where an actual large portion of the population there, they actually have digital asset wallets as a way to protect themselves from them not knowing if they'll be able to get the money out of their bank, or their governments are hyperinflating their currencies 100% a year. That absolutely offers them protection, because Bitcoin, for example, is the oldest one of those assets that they can custody it by a number in their head that no government, bank, et cetera, can come and take it away from them. It is providing value to those people, refugees and such.
Where do they withdraw it from, and in what currency?
So they have to go to an exchange, or there's actually, like, for example, in like Singapore, there are stores you could walk into with like a bag of the local currency and say, hey, I need some Bitcoin, and they exchange it for you, and they say, okay, what's your address?
I do understand. I get when you said that, I'm like, okay, I can see some validity, but then at some point, would you not agree that the world economy in general is becoming better and better, and countries now versus 500 years ago as a whole are much more stable, and the least stable are becoming more stable? So what happens when everybody's hit a certain level of stability? What happens then?
Yeah, I'm not so sure about that. I mean, the future is definitely very, very uncertain.
Every future is very uncertain,
right? But I would say, so even aside from those emerging market use cases, I like what you said before about art and baseball cards and things like that too, right? You think about Bitcoin. It's the first internet native digital asset. There will never be more than 21 million, right? How many millionaires do you think there are in the world right now in US dollar terms, right?
Yeah.
So there's like 50 something million millionaires out in the world, right? There's not enough Bitcoin for every millionaire in the world, even the poorest millionaires to devote 3% of their total net worth to it, right? It is a part of internet history and history as a whole, right? It's going to be around forever. And to own a piece of that history.
Before you say that,
sure, yeah.
All it takes is the government saying, sorry, can't use it.
And that's a risk factor. And I would say that
but then
is
you can't say it's going to be around forever. I can't even say the stock. I don't even believe the stock.
I think it will.
By the way, that's fine.
Yeah.
But you said it very matter of fact. It will be around forever. I look at. I don't even say the stock. I would joke with people and say, we buy stocks, we buy real estate, and all it takes is a nuclear war, and then we don't have it anymore.
How do we know that more Bitcoin won't be created?
Yeah,
the code is open source. You could see it in the code basically.
Can somebody change the code?
Absolutely, and the code does change, right? So it gets upgraded.
So it could be more created.
I didn't know that.
Technically it is, but you would have to have every miner and node follow that new set of code, right?
So you have to convince every miner,
yes.
Hey, if we change the code, you can go mine more and make more money. That doesn't take much convincing, does it?
I think it would take a lot of convincing.
Maybe you're right, but look at it going, show me somebody's incentive and I'll show you their action.
Right.
So if all of a sudden every Bitcoin is mined, and then people are like, well, what do we do now?
It's the fee revenue.
We're not collecting fees, so let's go and make more.
We can go change. Hey, if we all agreed to add number of Bitcoin, all you did was change that. Remember one thing.
So what's going to happen there is that it would create something called a hard fork, right? Because not every miner and node is going to agree to go to that updated code system. And the market will very much likely value the core code, the core monetary policy as like the quote real or the original one. So, and there's been many forks of Bitcoin in the past for contention of how to code it, right? Things like Bitcoin Cash, for example, right? But the core Bitcoin code would very likely be the one that is taken seriously, followed more, and valued higher.
So have the ones in the past?
What's that?
At these forks, have they gone in a different direction that everybody thought?
Not for the total supply. No, they've all kept that supply the same.
We're 14 years into this. No, and Greg, I appreciate what you're saying. I really do. I think, I like the stuff you're bringing into this. But again, nothing I've heard has said the value is this. So, and to your statement of it would never happen, I go back to my example. The top tax bracket in 1913 was 7% over everything over $11 million today. Yeah. It is currently 37% on every dollar above $578,000. That would have been an unfathomable number back then. And people said, there's no way that's going to happen.
Right.
Those are things, like whenever I hear somebody say like, it's not possible, I think to myself, all the things that weren't possible that did happen. And I look at hard coding. You're right. Hard coding is awesome, but show me somebody's incentive, I'll show you their actions. Guys, you can't mine anymore because we're all mined out. But if we all agree to a change, you can now mine more. So you're telling me I can make more money? Yes. Okay, I'll do this change. I'm not saying it's going to happen, but I can't. I don't think it's probably more probable than people believe. You can't.
Yeah, when I say that it's not going away, I really mean that infrastructure,
the 21
internet.
million coins.
Oh, the 21 million. Yeah,
the 21 million.
It's
coins.
I mean, just based on the ethos and the story and the vision of the pseudonymous figure.
By the way, how long has the ethos been around? I mean, really, Bitcoin's only been talked about at length for 10 years now, not even.
Something like that,
and I look at it going, boy, we're in such a young phase. It's like the internet.
Right.
It's a young phase. And
I was investing back in the internet days, and it was literally like, Paul, the internet's the future. Everything's the future. It's like, oh, yeah, you make sense. But I look at it now going, man, I don't disagree. I've said in every video about crypto, I say, I don't believe in its current state today that it exists. Does that mean Bitcoin's gone? No, it just means that I don't think the idea of how it's going to be I always look at the first thing I always agreed with the 21 million set in stone. I remember just saying, come on, give me a break. 21 million set in stone. We have gold-plated stuff. We have 18 karat. We have different varied levels of gold. We altered the oldest thing in the world to make it more attainable to get more of it out there or to get similar things out there.
I think that's the big thing that gives it its value is that initial vision, that initial story. I think that if you do try and change that it would just not be followed or value even close to the core Bitcoin code that came out in 2009. That's just a personal opinion, right? It's really up to them. It's up to the market to value everything, right?
How many miners are there? Or these the main miners you're talking about, which
right.
nodes?
So there's two things, right? There are nodes that are keeping track of the ledger, and then there are the miners that are securing the transactions that are getting paid.
Can anyone be a miner?
Oh yeah, absolutely.
Was your brother a miner?
He wanted to be.
Yeah.
My brother wanted.
It's not very economical unless.
Yeah, my brother wanted me.
Unless prices are high, because doesn't it cost like 11,000 a coin right now?
It costs. It's 29,000.
No, I meant the mining. The mining cost.
Well, it's price in energy, not dollars, right? So however much it costs you to produce energy is going to change that. Yeah, it depends on what you're paying per kilowatt hour. So like somebody in Ohio,
what would it cost them to mine a Bitcoin?
It also depends on the processing hardware that you use as well. I'd have to look that up, but it is not economical. If you were to buy a Bitcoin miner and put it in your basement and you think about your hardware cost and your cost of energy and everything to make an investment there, you're not doing it at scale to probably be profitable with it. There are very, very specialized, like these huge data centers that negotiate power prices at a cheaper rate and everything like that. Like those are the main ones that are making money from it. It's hard for a normal consumer to do it, but it is possible.
Can you explain blockchain? Because this is something where people will say, you guys don't understand the blockchain. I'm like, no, I don't. Explain it to me. And they're like, well, you just don't get it. I'm like, well,
they don't explain it.
I don't.
Right. I'm just like, okay, you don't understand
what is the blockchain.
It's a ledger.
That's all it is.
And it's not necessarily, from my understanding, it can be used for other things outside of cryptocurrency. Is that right?
It can. There absolutely. I've seen examples of this where it's used, for example, for supply chain track and trace, right? So any system where you want to disintermediate it, right? You want to replace trust with truth in the system, then blockchain might have application for it, right? Now, blockchains generally are much slower because for them to be decentralized and secure, and you need to have a system in place that makes it so like a hacker couldn't come in and say, oh, I just generated 1,000 Bitcoin, send it out of thin air and send it to you, right? You need these security mechanisms built into that and that immutability of that blockchain so you could be sure that there was no monkeying around with the ledger, basically.
Yeah, but when you say replace trust with truth,
yeah, can
you expand on that a little bit?
Yeah, because when you think about custodying your assets or your money and everything, you are trusting third parties with your money, right? You are trusting that they are doing what they say they're going to do, and that they are going to give it back to you whenever you want, right? Things like that. Whereas when you have these immutable ledgers that are storing this information forever, that anybody can pick a random number between 1 and 10 to the 77th power, and now they have an account, and now they don't have to worry about any third party that could do something to that system to break it, to take that person's money, right? That is, and then they could verify their balances, their transactions on the blockchain. That is the truth, right? They don't have to trust anybody. They just have to trust the code.
Sure. That sounds wonderful.
Yeah.
And it goes back to the thing I'm going to say. It still doesn't tell me a value.
Mm-hmm.
But like you said, it'd be wonderful to have a system that I sat there and said, this is my account. I don't care what happens. It's not going to get. But again, that still goes with trust still. You trust that the software is still built to protect you. There still is an element of trust there. You can't, go ahead.
It's the code, right? You'd see the open source code, right? Anyone could read that code and understand what it's doing.
Who's going to read that code? You're talking about.
It's not that long. And any computer, it's written in C++.
But one of the things you said in that interview, you talked about how complicated blockchain and crypto is.
Mm-hmm.
That kind of concerned me. You said that in the interview when you said, oh, it's a complicated thing. You're like, oh, it's very complicated. I'm like, whoa, like that's. If I'm going to trust something, I don't want it to be complicated. I want it to be very, very simple.
I would say it's complicated to understand it, but what it's natively doing and the functions, it is actually relatively simple. but it's a complicated topic to talk about and wrap your mind as we're having this conversation, right?
Yeah. See, I don't know. It's funny. The most common comment I get is the same thing I heard back in the real estate bubble when I wasn't buying stupid real estate back in all these things like, Paul, you just don't get it. I'm like, you're right. I don't get why we can value. Like when I hear Kathy Wood saying $1 million per cryptocurrency,
Right.
I'm like,
For Bitcoin, yeah.
For Bitcoin, I'm like, where'd you get that number?
Right.
Where the hell did you get that number?
I do wonder where they pull these numbers
That's why I sit there and say, I don't know if it's $1. I don't know if it's $1 million. And
I think that's to the speculation part.
And your explanation of why blockchain matters and crypto, wonderful. But the investment thesis behind it, it's just not. I have a hard, like, I'm glad you said, hey, it's more speculative than anything. And by the way, I do consider gold to be speculative. I do consider anything that doesn't give me, I shouldn't even say that. I believe buying a cash flowing item can still be speculative if you pay too much, because every investment is the present value, and you're going to make the present value of the future cash flow based on assumptions. That's all speculation to a certain level. But at the end of the day, we can, like you said, there's a history for certain things that we can sit there and understand. With crypto, I truly believe there'll be more than 21 million Bitcoin, because I'm just like, all you have to do is give people an incentive to have that, and it's there.
Yeah,
I do think that one will happen.
I do not.
You do not?
I don't.
I guess time will tell.
Yeah,
Would
time
you
will
say
tell.
2040?
2140. So we'll all be very long dead by that time.
Oh, come on. All right.
Well, who knows?
Yeah.
I have one more question for you.
Yeah, sure.
What is your end goal with your 20 to 30% of your money invested in? Like, what is your goal to just leave it there forever, or eventually pull it out and have more US dollars, or what's the goal?
Yeah,
here?
I would say a big part of it eventually is to, you're right, pull it out when I'm retired or whatever. I do, you're right, I do personally believe that some of those assets will outperform certain other indices based on their current valuation. I'll say that I do think that there will be other hype cycles in the future where they'll be overvalued, and then I probably would sell it. So you're right, there's that element of it. But I would say that.
But you can't give me overvalued, because you can't give a value. You know what I mean? Like, that's what I'm sitting there saying. Like, if you can't give a value, then how can you say something is overvalued or undervalued?
It's very tough, right? And everyone's trying to do it.
No, it's impossible.
Right? Yeah, I would say it is impossible.
So how are you going to know in the future when it's overvalued versus undervalued?
Right. It's going to be very, very tough to call. You have to look at every other indicator that's out there, right? What
did you just say? The story?
What's that?
The story?
The story is definitely part of it, but in terms of what are other assets, like the correlation, right? Because there's a lot of times these digital assets, they either the correlation that grows towards gold or grows towards like high risk assets, right? Like tech startups, right? So the way it's valued compared to other assets, it changes. But when you think about market cap, right, like you said, like you could overpay for certain assets. I do think that that ratio of Bitcoin lags so much behind gold, and that I personally believe it's a better gold. More people have to personally believe that there's going to be a catch up there. We were talking a little bit about like issuance rate before, like the technology is going to be there in the next decade for us to mine precious metal of asteroids, right? And that kind of like no one's really planning for that in the value of gold in the future.
Yeah, but at least there's a quantitative amount there that we can sit there and say, hey, here, and by the way, it's funny you keep going to gold, because I keep going like, gold. Like I have gold miners as like ETFs that I own, because I took a gold and sat there and said, hey, how much do these miners make from it? There's a cash flowing stream that I can value.
Right.
But I'm looking at going back to value, like if you can't determine a value, how can you know it's over or under? And you sit there and say, hey, Paul, but that's why I asked you before, why gold? Why not silver?
Right.
Why not some sort of, because I always heard people saying like, oh, it's a hedge against inflation. Like, history has shown it's not a hedge against inflation. It happily has not worked as a hedge against, and even gold.
Not the last decade or so, yeah.
Well, that's the entire life of crypto.
Yeah. Oh, I thought you were talking about gold. Sorry.
Oh, no, I'm sorry.
Yeah.
I'm talking about crypto versus.
Oh, yeah, no, it's way too young to really make that comparison, I think. Yeah. Yeah.
So I'm looking at going, overvalued and undervalued is something that you have to have as a barometer against something else. Like there has to be some sort of like, okay, this is my intrinsic value. There is nothing. I've yet to, besides somebody saying to me, I think gold, and by the way, spoiler alert, I've never had a Bitcoin enthusiast tell me that Bitcoin is overvalued. Not once have I ever heard that. Is it really possible?
Yeah, absolutely. I think there's a I have no idea. There's a terminal like price where the ratio based on all the other assets out there where like it might be more stable and make more sense.
So
I don't know. Yeah.
Let's say it's 2041, right?
2141.
2141. All 21 million coins are okay. So now how do we create? How does the price continue to go higher? What makes it go higher?
So there's the scarcity element of it, and there's the fact that the issuance rate of the medium of exchange, right? So if that's still the US dollar at that point, that issuance rate
so it's based
greater
on
than
other
zero.
Things.
Oh, absolutely.
Okay, so
yeah.
It's based on something having to do with the US dollar.
Yeah.
Because that's what your price, that's the denominator, right? It's interesting to try pricing things in the dollar, try pricing things in M2 supply, right? Charts look very different. If you look at that, the stock market hasn't appreciated in 13 years, right?
And by the way,
the
difference is I can also look at, like I don't look at currencies the same way because I look at currencies saying it's a speculative thing. You know what I mean? I'm not getting but with a company, I look at that saying there's a stream of cash flow potentially.
Right.
And I look at crypto the same way you're saying it, but
there is cash flow in some cryptos, right? Look at Ethereum, right? There's a great website I could show you, crypto fees, where you could see the amount of fees people are paying to use that blockchain, and it's millions of dollars a day. And
if I have Ethereum, am I getting that fee?
In a way, you are, yes, because the supply is being reduced over time.
It's like buying back shares.
Yes. And if you're owning the staked version of ETH, then you're getting a yield from that, which is like between 3% and 6% a year. But it's paid out in Ethereum, in Ether.
Oh, it's only paid out in Ether?
Yeah. But of course, you can convert that to US dollars as you get the yield.
Are these things easy to convert? Like if I bought a Bitcoin today, could I sell it tomorrow very easily?
Oh yeah,
absolutely.
Yeah, exactly, on all the centralized exchanges, yeah.
And if I went to if I had a Bitcoin, let's say I had Coinbase, like one coin, could I go to an ATM and like actually it would work? I could pull out cash.
There's those Bitcoin ATMs.
Yeah, I can go to a Bitcoin ATM.
But it's not going to give me $30,000.
Yeah, I don't really look at the Bitcoin ATMs too much. I look more at the centralized exchanges. Yeah, I'm sure that there's some possibility of doing. I've never really interacted with one though.
Yeah, I've seen them in the malls and stuff. So
yeah.
Listen, I think the idea, like you said, about these ideas are great ideas, just like the internet was a great idea, just like cars were a great idea.
Is a great idea. All of this is a great idea.
Look how much cars have grown in the last 120 years, how much air flights, and guess how many car companies and airlines and all these things all went to zero. Thousands and thousands and thousands of these things. And I understand that you're saying, like, I just think there's a lot more speculative. I think it's far more speculative than the crypto enthusiasts want to admit. And it's probably a lot more useful than the anti-crypto people want to admit. However, the usefulness of it can literally be wiped out. That's what concerns me. It's like if you get wiped out.
From the regulation, you mean? Or
yes, absolutely. Yeah. From any sort of regulation, from any sort of government saying, okay, Powell recently said, which I'm sure you guys loved, crypto's an asset here to stay. But he didn't. Go ahead.
So I do think when they start talking about this Fed now, I think that they could bring in some type of Fed coin, and then that makes every other coin, including Bitcoin, less valuable. I think that people would flock to the federally backed coin.
I have a complete opposite opinion on that one. Yeah, because it's centralized, right? And what gives Bitcoin its value is the decentralization, hands down.
Wouldn't they be using the blockchain though?
There's no blockchain with Fed now, and there's also.
I'm saying if there was a Fed coin, they would probably incorporate blockchain.
Probably not, because the blockchain as a technology, it really is decentralization at its core. If it's not if you don't need to remove third parties, and so in a case like Fed now, there's always gonna be a third party, then a blockchain probably wouldn't be the most efficient way to do it. But if you look on the Federal Reserve's website, like there's a lot about Fed now, how it's not trying to be a Fed coin, right?
We'll tell you that.
Right. We'll see what the future holds. But I think that whole concept of just that instant payments thing, that's not what gives its value. It is the immutable monetary policy in the code that gives its value, and it's decentralization that there are no intermediaries involved with it, right? Those are really what give it its value to me anyway.
Can I ask everybody out there a question? Do you want to do a transaction in which there's no intermediaries out there? That's the question you have to ask. And even if you like the idea of having no intermediaries out there, would you trust it more if there was an intermediary out there that you could rely on to correct the situation if something goes wrong? An example of what worries me is like you look at banks that fail, right? Whatever banks have failed in the past, whatever. And I look at that going, the government's going to back the people there. When it comes to this passcode, this code that happens, if I lose it, who's going to be there to give me my money back?
Nobody.
So I look at that and I've seen how many passcodes have been stolen. So when I hear all these like things and I go, if I'm a person who says I want to store my money in something that could be stolen, and if it's stolen, it's gone forever. But in another institution, like a financial institution, where if it's stolen or if it goes away, at least I have the government to sit there and say, listen, we're going to make you whole, because the entire banking system relies on this.
Absolutely, and there's definitely value in that, right? If that's going to continue, right? Things like FDIC insurance.
Well, even beyond that,
you're right. Even beyond that, you're right. Exactly. So you're right. That definitely does need to exist to give people comfort, to keep the fractional reserve banking system moving forward, right? Like that, you kind of need those guarantees and trust in it. But that's the thing, is that banking is a system of credit, whereas Bitcoin is a system of equity, right?
Yeah, but like you're saying like truth versus trust.
Yeah.
But again, if I don't trust, passcodes have been stolen. It's not like it's trusting.
But a gold bar could also be stolen out of your safe as well.
Absolutely.
Yeah. It's the same comparison.
Absolutely. But that's why I don't have gold bars. That's why I put my money in
some people do. Some people do. Yeah.
But I put my money in an institution because at the end of the day, I want to know that if my money, something happens to it, I'm going to have the full faith of the U.S. government. As much as I might be in favor of limited government as a libertarian, I have that full faith the U.S. government's going to make me whole. And that's a very important factor.
Yeah, and I think that's definitely, I mean, a very large portion, most of my net worth is definitely in financial institutions for sure that I trust. So I completely agree with you, but I also think that having this as a just in case hedge against the system, right? I think there's value in that.
See, I don't think crypto is a just in case hedge, because at the end of the day, just in case what? The system goes to nothing?
We can't predict.
Then what's the point of? Then what's the value of Bitcoin going to be? If everything goes to zero.
Question: do you think there's a higher likelihood that let's call it the U.S. government system goes to zero, or the crypto system goes to zero?
I don't think that there's much of a likelihood of either of them going to zero. What I do think that there is a likelihood of is that the monetary policy of the US dollar and other fiat currencies is very unpredictable. I think that system only lives and breathes by adding more and more to that supply, and that supply has to settle somewhere. It's generally going to settle to assets.
More unpredictable than the
government. The 300-year-old government of the United States. You think it's
more unpredictable than,
or less?
I think that the issuance of the U.S. dollar and fiat currencies is completely unpredictable, and I think that, I know we disagree on this, but I do think that the monetary policy of something like Bitcoin is predictable, right?
By the way, it could be predictable.
Yeah.
But what's more likely to go to zero? That was his original question.
So if the U.S. dollar is the denominator, as you have a divide by zero error, if you're talking about.
I'm just sitting there saying, if all of a sudden we had Armageddon.
I mean, of course, it's hypothetical,
and the U.S. dollar goes to zero. Well, Bitcoin is denoted in U.S. dollars.
Right.
What happens to crypto then?
Who knows? Maybe dollars will be denominated in Bitcoin. You don't even know.
Fair enough. I think it will be denied. As I always tell people, if the U.S. government goes to zero, whoever has the most land and most guns probably wins.
Right.
And I look at that saying, I don't think that's a hedge. That's what I'm saying. When you say it's a hedge, I'm like, that defeats the purpose of a hedge.
People have to believe in it, right? So
there's that trust factor. It's not truth. It really is trust then.
So you could take that in a few different ways, right? It's the truth of what your balance is and the capabilities of what the system can do, right? And what the ledger says, like those things are definitely the truth. But
fair enough.
When you have so Venezuela is a great example, right? Like the Bolivar. So like that is completely corrupt country, completely hyperinflated. U.S. people in that country, do you rather have your local currency or Bitcoin? Like they will 100% all say Bitcoin, right? Now, yes, we're in the the largest military, the greatest rule of law in the world, right? Absolutely that we're going to trust the U.S. government system more than probably practically any other system out there. It doesn't have those risks as those emerging markets do. And it might be a lot easier for someone in Venezuela to get Bitcoin than U.S. dollars.
Let me ask you one more question.
Sure.
I just thought of this.
Yeah.
If there was any type of internet attack, and all of that Bitcoin would be gone. Yes, the banking system would suffer.
right.
But people would still have cash. People would still have maybe physical gold.
I don't think cash would matter at that
something
point.
tangible. But what would your money would just be gone? It's vaporized.
I guess you're right. If the entire internet and all the storage and everything was down forever,
But
then
that's the hedge we're talking about.
That's what we're talking about. Going back
yeah.
to hedge.
That is the one thing that you need to work. You need the internet to work, right?
Which, by the way, I think is a very likely situation.
Yeah.
Right, of course.
But I do think it's pretty obvious as of the state that crypto is more likely to go to zero than the U.S. government and the U.S. dollar.
I don't think either are going to zero ever. I really don't.
No, that's fine.
Yeah.
That's fine.
Yeah.
I agree with you. I agree that the U.S. government's not going to zero. But yes, I get what you're saying. But I look at it going, there have been hacks on crypto exchanges. Has there not been?
Oh, yeah, absolutely. Yeah.
I look at that going, well, then where's my safety?
Right.
If there's been hacks where billions of dollars worth of crypto has been stolen, then where's that? Then the trust there is not there. And then it requires some sort of regulation to protect me. And then we're back to square one.
So for the most part, yeah, because the centralized exchanges and the methods that they do their custody, that is something that we're all asking for regulation for, so that people are safer. 100%, no doubt about that.
And the government's going to want something in exchange for that. And what's that going to be?
Well, the companies that are providing those custody solutions and other financial institutions, right? They're going to make fees off of something like
Forget
that.
about the fees. What's the government really going to want?
Higher taxes,
Control.
Information.
Right.
They're going to want control and some sort of, like if I'm the government, I'm going to be like, sure, we'll give you all the regulations in the world, but we want to know who has what and what's going on there. Don't you think?
I do absolutely
well, then where's
think
the
that.
Decentralization then?
The decentralization is still like your balance, right? You're right. Maybe you won't be able to convert it locally, but someone in the world will. And as these get more integrated in a lot of these internet native applications and nation states and everything, it'll be much easier.
Maybe we can call it less centralization.
less centralization. Can you trademark that?
I think so.
Greg, I do give you credit.
on that.
I do think you're probably the most knowledgeable you're definitely the most knowledgeable person about this. I just want to caution everybody, and I'm not trying to pick on you.
Sure.
Guys, there was no reference whatsoever to any sort of value. And I just sit there and say, fine, if I can't value it at 1 or 10 million, like I always say to people, that's the too hard pile for me. Like if I can't if I don't know if it's a good deal at $1 or $1,000, then I look at it going, then I got to just pass on it. And that doesn't mean I'm right. It just means I think the questions that I'm asking are very legitimate questions of saying, hey, I think the way people feel more comfortable with it is when they can go to their government and say, hey, my passcode was stolen, because it has happened a lot.
Oh yeah, absolutely.
So that kind of gets rid of the trust factor and even the truth factor, because it's not the truth yes, it's the truth that my money, but it's not in my possession anymore.
Yeah, it's gone.
Even though the account's still there, the truth is my passcode is gone. So I don't care if my account's still there. And now, how do I prove that was my account? And how do I get it back?
Yeah.
It's gone. And I think the only way to protect against that is government regulation. And that's going to require the government saying something. They're going to want something in return. Fees? Do you think the government really cares about the small fees? Yes, they want the fees, but they also want to know what's being done with this.
Right. But you can, again, the beauty of it is the non-custodial nature of it, that you have a big number in your head or however you store it, and that's people have to rip it out of your brain in order to take it from you, right? So that's peace of mind.
What's this number? How long is this digit?
Well, it's 77 digits, so you're not going to memorize the number.
By the way, 10 to the 7th power.
Yeah,
just keep in
massive.
mind,
Yeah.
millions is 10 to the 7th power. This is 10 to the 77th.
Exactly.
A 1 with 77 zeros after it. A Google is 1 with 100 zeros after it. So it's almost a Google.
Right. It's close to the number of atoms in the observable universe.
I was going to ask you. I was literally going to say, how many atoms are there in the universe?
Right. Yeah. So it's probably something like 10 to the 74th power, something like that. Yeah. Observable universe. Yeah. It has to be that big, or else.
So how am I memorizing that?
There's ways to do it with these things called seed phrases.
Safety deposit box, you said.
And I look at crypto saying that's wonderful, it's great. All the things you're talking about are awesome things, and they make great sense for a way for money transactions to occur. But at the end of the day, I just don't see how you get the government out of money. Any sort of financial transactions. Just like I used to hear the argument 10 years ago, Paul, it's not taxable. And I remember saying to people, what are you talking about? People would say the same thing. Well, if it was taxable, it would lose a lot of its luster. Then all of a sudden it's taxable. Well, no, now it's this. It's like, it's always something. When I heard everybody saying, the argument in your case of like, how many people were against crypto 5 years ago and now are doing funds and doing this? What's the difference between that and 21 million coins being changed? I don't see any difference with that. You just give people an incentive and all of a sudden I will see their actions. If I said to you today, come talk on the show, you said no. And I said, how about I give you $1 million? Would you have come to talk on the show?
No, because I can't accept money based on stuff with my company. Yeah.
Based on what?
Based on policy with my company, I can't accept.
Fine, 100 million.
Okay, well, yeah, give me enough to retire.
My
then
point
yes.
My point is, there was a number that made an incentive.
Sure. Yes.
And at some point, there will be an incentive enough for us to go, 21 million coins.
We could take it as 29.
What's 21 and a half? It's not a big deal.
Yeah, I don't think that's the case. I think that will make it lose its luster. I think as soon as you try and change that max supply, that will crash its value completely. I really do believe that. I think that is what gives its beauty.
That's what I think is going to happen, though.
I don't. Yeah, I mean, I guess we won't know, right? But
we won't know.
We might know.
Yeah.
Let's look at it now. We
might know.
About 2141.
Yeah, but they might do it sooner than that.
That's true. You're right, but I don't see it happening. It's just not in the
Greg, what do you do for a living?
Code. I'm a consultant and a subject matter expert on blockchain, Web3, digital assets.
So you
metaverse.
get paid to do what?
I get paid to consult on this technology, right, and to provide services to our clients around that technology. But,
all right. Well, Greg, thanks for coming in.
Yeah, thanks,
it was a great conversation. Like I said, it's just I've not heard a single thing that tells me this is the value of Bitcoin. And I do think there's a point of crypto in the future. I just don't get. I just look at it the same thing. I go keep it simple, stupid. Government doesn't want competition. At some point, the government thinks there's competition. They're going to say, "We done." I just believe that.
I think if you just make the comparisons between gold and Bitcoin, right?
That's what the government did.
Yeah.
The government said, oh, gold is inconvenient. Right. We're going to just eliminate gold being a factor here. They did exactly that.
They also, back in the 20s or 30s, they also made people sell it to them as well.
Yeah. So you look at that, and from 20s and 30s to 1975, 1974, whenever Nixon did it, 72, whatever it was. So I look at that going, I think you just made the argument for me, and the very thing that you sit there and say, this is more like gold. And literally the government said, okay, gold's making it too hard for us to print more money. We're going off the gold standard. That to me just says the point completely.
Yeah.
Final thoughts.
I think there is. I think that the principles of Bitcoin, for example, I do think that. I mean, you say you're libertarian. I actually do think that a lot of the libertarian values are
for sure
are very much aligned with Bitcoin and the separation of money and state, which at its purest form, I believe it is. Aside from Bitcoin, I also believe there is internet natives that actually do have money accrual mechanisms. Right? They do have the ability to generate fees and return value to users. You're right. It's up to the market to decide how to value those things, and that could be very challenging. But I think it's hard to argue that these things have an ability for value to settle to them at some amount, and that there's a lot of technology that's going to be in internet native applications that will be built on these. So I'm still very excited to see the future of digital assets. And
as
Bitcoin.
am I.
Yeah,
I really am.
Yeah.
All right.
Thanks, Greg.
Yeah,
Appreciate
no problem.